How's it going, everyone? It's Sam. I want to talk to you today about some of my favorite SPACs right now, some of my favorite SPAC stocks that are in the market right now. And there's a significant number of companies here. I really like these, and I think these are still good values where they are now. Now, I'm not saying that they won't go down in the future, but I feel good about these companies, and we've been doing really well with these companies, honestly, because a lot of them have really exploded since we talked about them. So I want to go through them today. I want to talk to you about each one and just give you like a brief overview of the company and why I like it, why I think it's going to be so important going forward, and what I kind of think about with the company and where it's moving in the future. So if you guys like this, please leave a thumbs up. I really appreciate it. We've talked about a lot of companies recently that have done really well. For example, DMYD, which is a company that we'll talk about here in a second. They went up 20% after we talked about it. Like the next day it went up 20%. I was able to get in on it, and some of my Patreon members were too, because I told them about it before I could produce a video. It takes a couple hours to be able to make the video, put it up. So it does take time, but if you want to get those notifications about what I'm buying and selling a little bit faster, you can check out the link down below to Patreon. Again, sometimes I have to make it right after the market closes just because I hear about it late. So if you're outside the US, it's really nice, because if you join the Patreon, hopefully you'll get the information earlier. And if you are in the US, then you can still get it faster, maybe before it jumps up. And if you don't already have an app, or you don't invest with a company that allows you to trade before the market or after the market, you should check out the link down below to WeBull. They allow you to go from 4 a.m. Eastern time to 8 p.m. Eastern time. So you can trade all but 8 hours of the day. And they're giving away 4 free stocks if you deposit $100. So it's an awesome deal. You get free money, and you get to use a trading platform that's really useful. So you should definitely check out that link below. And before you get into it too, if you don't mind just leaving a thumbs up, I really appreciate that, and subscribing to the channel if you haven't done that already. We're on the road to 50,000 subscribers. I think we're going to get there in like a week or so, maybe a week and a half. We'll see. But if you want to help that, if you want to help out the channel, you can definitely hit that subscribe button. It means a lot. It helps out the channel, and check out those other links down below. But let's get into some of these stocks that I think have a lot of growth in front of them. So this is not an all-inclusive list. So if I've talked about a stock before and I bought it and I haven't included it in here, even though if it's a SPAC, it's not necessarily a bad thing. It's just that these are the ones I'm most excited about. So the first company here is DMYD. Now this is a company that is merging with Genius Sports Group. Now I think one of the best ways to describe what this company does is it is like the Palantir of sports betting. And if you don't know what Palantir is, they do data analytics. So Genius Sports works with the sports leagues. They get rights to their games and their events. Then they do some analytic data crunching and all that. They form the data analysis and then give that to the sports books, so the online gaming industry. And then it's a continuous loop between those. They're kind of the in-between. Now, they already have a significant amount of revenue right now, and they already work with a lot of big names. So they work with the NCAA, March Madness, NBA, NASCAR, PGA Tour. They work with a lot of companies already, and they're in 10 of the available 19 states. So they've seen a pretty good growth rate so far. So they went from 2019, where they had 116 million, and they're expecting 145 this year. Now they're expecting a 29% compounded annual growth rate moving forward. And I think this is just a good company as the whole online sports betting space becomes legalized and it grows bigger. We've seen other companies like DKNG and like LCA that have blown up. So I think this is a company that can do well. And if you don't know too much about SPACs, they rarely go under $10 a share, because if you don't like the company, you can call up your broker and get $10 per share on what you bought. And we were able to pick this stock out again before it went up 20%. So I talked about it, and then it popped off the next day. Now, the next company is Switchback Energy. They're merging with ChargePoint, and they've been up a lot over the last 6 months. We bought in at $16.50 a share. We've ridden it up a lot since then. So since then, it's up 160%. I really like this company even now because they have such a stranglehold on the market. So they own 70% of the available market right now in North America. They're 7x bigger than the next competitor. So they own so much, and a lot of people think that maybe they won't grow as much because they are that big. But the thing is, the market is expanding so quickly that I think this is a major positive for ChargePoint, because they already have such a good hold on the market. There's a reason for that, right? They offer things that the other companies can't offer. They're not as good. The other companies aren't as good as ChargePoint at what they're doing. That's why ChargePoint has 7x. The next biggest competitor is 70% on the market share. So as the whole industry grows, ChargePoint is going to take advantage of that. I've done a video on this before just a few days ago, actually just yesterday, I think, about ChargePoint and why I think it's still a good value now. So if you want to see that, you can take a look after this video. But I still like the company even right now if you're looking 10 years down the line. Now, the next company is in the EV space, but it's a little bit different. It's MP Materials. This company is really interesting because they mine for rare earth materials or rare earth minerals. And the thing is, not too many people know about this, but almost all technology, a lot of technology needs rare earth materials like cell phones, like the new EV batteries are going to be used so much when we expand to EV. And the thing is, China owns 80% of the market and MP Materials owns 15% of the remaining 20%. So China has a stranglehold on the market. I don't see a way that MP Materials can really falter because of the fact that the government is going to back them. They already have a $10 million grant from the Department of Defense, and this company is really our last big resource from rare earth mining materials, and I don't think the U.S. is going to want to fall behind in that way. The next company is BFT, a company that we talked about recently and got in pretty early on. I think we're still pretty early right now, and this is a company that is a payment processing company. It's very similar to Square, and they actually have very similar amounts of transactions. So Square is around $108 billion in transactions, and BFT is merging with PaySafe, and they do a lot in iGaming, which is a growing sector, and they have about $103 billion worth of payments that go through their systems. Now, their revenue is lower compared to Square, so they only have about 1.5 billion in revenue as opposed to Square, which has 4.5. But the thing is, they're valued at about 10 times less than Square right now, and maybe it might change a little bit because they have moved up a little bit in price, but they're still valued maybe 9 times less than Square. So there is some room to grow. Of course, they're not quite at Square's level, and Square has been exploding this year, but this is a company that I think you should definitely take a look at. The next company is IPOP. And this is another company. We bought around $20 a share, and we were even late to the party a little bit because of the fact that it had gone up 100%. But they're going to merge with Opendoor. Since we bought in, they're up 27%. They are a company that I think has a lot of growth in front of them. They're a company that's from a very famous VC entrepreneur or investor. His name is Chamath. And he's been in a lot of SPACs recently. He's got his hands in a lot of different pots in that way. And this company, I think, has a lot of room to grow. I'm not selling it now. If you look at its competitors like Redfin and Zillow, they've done quite well. Their market caps are a lot bigger. So this is one that I think you should put on your radar. The next company is VGAC, and this one's a little bit more speculative because of the fact that they don't even know who they're merging with, at least at the time of this recording. Now, the reason I like VGAC is the fact that they are a Richard Branson company. He is a businessman that's done quite well. He's been the founder of Virgin Galactic, and this company is still trading pretty cheap. So again, with SPACs, they really have a limited downside, but right now you can see it starting to get some upward momentum. Richard Branson has said that he wants to get in the EV space and that he thinks that there won't be any ICE vehicles around in 10 years. So this is an interesting play. I have a good amount of money in this, and I'm just going to let it ride. Of course, it is risky because they don't even know who they're merging with. They don't have any projected valuations or anything like that. So this is kind of a risky stock. But this brings us to our last one, which is kind of similar, and that's Pershing Square Tontine Holdings. This is a Bill Ackman SPAC. So this is the largest SPAC in the world in terms of how much money they've been able to collect. So they have about $4.5 billion, and they're trying to merge with a mature unicorn. So by that, it's a company that is a pretty large company. They're looking at maybe a $60 billion plus company, and they want to make sure that it is a good value. They want to make sure that it produces good numbers and it's stable and has a high barrier of entry for competitors. But overall, I just like Bill Ackman as an investor. He's a really smart guy, and I think that a lot of people trust him a lot to put $4.5 billion worth in his company. Now, that being said, there was a billionaire that invested $400 million of his own money into this company. So he owns 10% of the SPAC essentially. But I think this is an interesting one to look at. It's probably going to have a lot of hype when they do announce a company that they're merging with. And with this one, the SPAC price actually started at $20 a share. So you can just kind of imagine it as it being at about $13 a share now if you're comparing it to the others. So thank you guys so much for watching this. Let me know which of these companies you're looking at in the comments below. Again, we haven't gone really in depth on these companies, but I've done videos on every single one of these companies. And there are some companies that I didn't even include in here that I like. There are other companies that aren't SPACs that I really like that I've covered recently. So if you want to know more about these companies, you can watch those videos. I'm sure I'll give updates to a lot of these as there are price movements and as there's news. But definitely take a look at these if you're interested in any of them. If you want to know whether I'm buying them or selling them, you can check out the link down below to Patreon. And if you want to get those 4 free stocks and be able to trade pre-market and post-market, you can check out WeBull down in the description below too. Thank you guys so much. I appreciate it. And if you want to see a video on some stocks I've been buying this week, I go into a little greater depth. I'll put it right here. Thank you guys so much, and I'll see you in this video. Bye.